Could markets around the world be heading for a meltdown? Well, it turns out that stocks just broke below the 50-day moving average. And of course, this marks the potential of now a flash crash. We've also seen gamma positions start to move. And on top of all of this, we have one of the big short investors, of course, Michael Burry himself, saying, hey, you know what? I've got some giant big put positions ready to go. Both SPY and Q puts were massive, and it made up around 93% of his portfolio. So with core retail sales coming in incredibly hot, it means that yields could be higher for longer. We saw pressure put back on the 5%. And of course, if we break above this area, we all need to be watching. That, along with semiconductors breaking back down, and of course, our thoughts on the major indices around the world is coming up in today's show. Get ready to cover stocks, commodities, and cryptos together. Well, welcome back everyone to the Daily Show where we talk about the macro lead indicators and the hottest charts. Let's go over the last 24 hours together right now. And I think it's pretty clear that it was a sea of red across the board. Specifically, banks and energy came under massive selling. And this is because of a mixture of higher yields for longer and also some problems in China that is starting to force through into other banks. We're seeing things like regionals starting to suffer as well. So speaking of China, what's going on in their property market? Everyone's talking about it. Well, things aren't good there. And we already know this. Of course, we talked about the charts and how we think that there's going to be stimulus somewhere around September, October. But take a look at this chart. It seems to happen almost every year. We get a drop off here. We get a bit of a spike in terms of property transaction volumes. And then we get this huge spike in anticipation of some form of stimulus coming into the yearly meeting that happens in October. It's just interesting how things tend to happen time and time again. Also, another interesting fact is then we have a up to 10% plus year to date to June. We tend to actually have more of a sideways market over the next couple of months. Now, I'm not necessarily a believer in this stat here at the moment, but I do know that this is what the statistics say when you have an up 10% plus year. Let's talk about Bank of America. We mentioned this in our previous video. Just interesting to see who's buying the dip. At the moment, it's been corporates and retail traders, not institutions and not hedge funds. If you're interested in knowing when they are purchasing, we will update you on this channel. So make sure to subscribe and of course, stick around for that. We also know that energy, industrial, staples, and healthcare have been the biggest inflows, with technology getting a massive 4-week outflow in it just before the crash that's now starting to happen in August. And we are starting to move in 6% territory of realistically more a correction at this phase. We also do know that BPSPX is one of our important charts. We moved from a 70 above to a below, which often marks a temporary bull high in markets. So when this has happened back in February, back in August of last year, and of course also April and May, we know that we hit a topping of the market. We saw a pullback, and it provided an opportunity to potentially buy the dip if you're looking for the right stocks. When will that be? When will we get the dip end? We've got a good indicator that can help us to kind of like figure that out a little bit later on. Let's also talk about statistics for the bulls out there. Don't worry, bulls, if you are very excited about being in the market and buying the dip, well, the stats are still in your favor for the end of the year. In situations such as this, August into October tend to be weak. And then, of course, we do go into some bullish pressure for the end of the year, that Christmas rally, and of course October, November, December generally posting positives. We also know that we need to be careful of the big quad witching OPEX. This week is OPEX, but it's only a mini one. September is also going to be an interesting one. Remember the stats: 7 up, 23 down the week after. Something to maybe screenshot and keep in mind moving forward. We know now also when we think about it as when do we tend to see a bottoming market? Well, because we're now in a corrective kind of phase, possibly moving towards what we call the moving average, 20 moving average or mean reversion, we know that we should be seeing bears come back in this sentiment survey. In fact, we want to see bears getting into around 30 to 35% of the overall analysis here on the weekly. Bulls have been in control recently. We know that the 19th of July marked the top of the NASDAQ. So we're pretty sure that we want to see a whole bunch of bears start to appear. And more importantly, quality technical levels get hit on the markets with turning events. And we'll update you here on the channel once we see things like that. This is a little bit out of date. We've been using it for a few weeks, but just remember, we expect volatility to rise over this point. With the update from both Goldman Sachs and Morgan Stanley in our previous video, if you want to go back and watch that one, we talked about the idea that there's basically a decoupling here that allows a huge amount of volatility to re-enter into the market. And that's exciting for traders because, of course, with high vol comes great opportunities. We've seen markets fall off so far. This is where we're at this stage. And we're obviously in this week, the week before what tends to be in pre-election years, the bottoming of the dip or the bottoming of the correction. Will it be again? Next week is going to be a big one. This week already has many different areas that we're looking at. Between 450 and 430 is where we think the market might stay. And this is because of something called maximum pain. If you're not sure what that is, we'll look at that later on today as well. Big trades continue to flow through the queues at these lows. Is this a defended zone? Well, it could be. It could create kind of a base in the future. But I do think based on the current analysis of this market, we might be going a little lower first. So some decent trades coming through. But where do we get more interesting? Well, this is a very, very, very thin market, but we've seen monster trades coming through for NVIDIA. Now, I would say this is profit taking from people that have actually accumulated near the base. And over the last 24 hours, we got NVIDIA getting an upgrade, which sent the stock realistically blitzing through. So we've gone up 7 plus another couple of percent, but we rejected the exact level that we thought we would over the last 24 hours as well. So we saw some selling come through. This is a dark pool transaction. It's not on NVIDIA itself, but it is on a 1.5 times long, which does tend to be where we see these bigger traders kind of float through if they're looking at taking a little bit of leverage while they're, to exemplify or to create more profit when they're getting involved. So that's something that is of interest. Gold continues to be an enigma with high core retail sales coming in 1%. And yes, I'll admit it. See, it's hard to predict. I actually thought we'd come in around 0.2 to 0.3%. We ended up coming in at 1. So my economist skills there were totally wrong. But the problem is that even if I knew it was coming in 1, did I know the direction of the trade? You could also say, yes, well, okay, hot economy, everything means higher for longer yield, so we're probably going to drop. But yeah, 1% was certainly not my expectation, nor was it most of yours in the comments down below. I don't think anybody really got that one right before the announcement. A lot of you did think it would be weak. Number 12 reading for gold, so a pretty large reading here. It could be a buyer trying to buy, but I think they're buying with a lot longer time frame. When we see those kind of hot economy figures and we see yields higher for longer, that could mean stagflation, but in general, it is actually a negative for gold, at least initially, until things become more clear. Now, what's going on in Asia? I tell you what, SE was a horrible earnings, down 26% or something on the day session. We now go to Target. That'll be an interesting one, seeing the American consumer coming through. And of course, we've got Walmart and Cisco still this week with some big earnings. But yeah, with the earnings of SE, man, that is a rise and a fall from great heights. Just a reminder, if you haven't already followed us over on our Twitter at FX Evolution or X or whatever it's called, links in the description down below in the link tree. But let's move over to options markets. Where will we be seeing some unusual options activity? Well, you can see, of course, because of earnings, we have an 11.87 times daily volume, SE Limited. This is monstrous. And it was a huge amount of calls, a huge amount of puts, and it ended up falling over 28.7% there. It was more than I even thought in terms of the end of the day. We also saw some interesting trade coming into the target announcement, 3.32 times 90-day volume, so that means it's quite high. And we continue to see this crazy transaction volume going on J&J. I mean, J&J has gotten some of the biggest options volume on it for quite some time. Also, out of ordinary, slightly above both on the Qs and SPY. I wouldn't be surprised if retail traders started stacking a little bit of puts because of the Burry news, and people love to follow Burry. Of course, I don't really think you should follow any of these big players. By the time you find out, it's already a bit late. You've got to be able to recognize and fish for yourself. Don't be following others. But 51% calls, 49% puts. This is the first time almost in 2.5 months that we've seen calls almost not outpace puts. 36, so not a high volume day overall in terms of options. But yeah, it's starting to come in more in line where people are starting to stack puts, and that buy the dip reflex is starting to turn into a little bit of, well, maybe we need to buy puts. That's starting to make you think that this sell-off is starting to get near the end or near a bounce kind of area. And we need to be wary of that. We need to be watching these zones. Last 24 hours on the markets and last 5 days. Let's look at it now. Last 5 days Healthcare's been one of the best. Energy still holding up barely. But take a look at this. Clean energy, regional banks coming under incredible pressure, and semis still down there as well. Gold also getting hit pretty hard from a pretty good run previously to a very, very bad run there on GDX. Last 24 hours was brutal on many of the same things. Clean energy, solar, no respite for that one yet. And of course, regional banks also having some problems. We also saw things like metals give up a lot of their gains, and semiconductors ended up down 1.2, even though Nvidia held pretty strong. So let's get into some indicators that could show us when we're bottoming in the market. First up here, we've got percentage of stocks above the 50-day moving average on a chart. And what this shows us is it shows us kind of when markets get a little bit too hot, and it also shows us when markets get a little bit too fearful. I like to use this on a 30. So that means that when we get underneath 30, we're looking for technical reasons that we could be bottoming. And that tends to work well for corrective style moves, even into semi crashes. So we're looking at stocks basically coming down below their 20-day, moving towards the 50. More of that mean reversion to the 20 weekly is what we're looking for. So of course, good indicator to have on the charts, and we'll update you once it hits those levels. We also want to be watching yields. So US 2-year yields, you can see here 4.9%. We're not above 5.1, nor are we below 4.6, but we're starting to enter the new territory. So if we close a weekly like above 5, that'll be the first weekly close that we have above 5, and it could mark the beginning of a new ramp in yields. And if that happens, treasuries are going to suffer. And of course, we'll be watching JP10Y as well. Have this one in your chart. New breakout will put pressure on treasuries. All right, let's take a look at copper and what's going on there in the wonderful world of demand destruction. Well, it's a new low, and it's showing you that there are problems in this world. If this closes this weekly below this level here, which is pretty much where it's trading right now, 3.66, then we could be moving really low on copper. Of course, we have seen buyers before at between the 3.55 kind of level, but if we keep moving down, that doesn't bode well for the economy. And actually, it shows us that there is a lot of weakness. Really, what the Fed's doing is technically coming through, although you wouldn't believe it when you look at core retail sales. What about treasuries? Well, treasuries have dropped as well. At this stage, if we close below here on a weekly, we've got to think treasuries are moving towards 88 and 90. And this is kind of like our biggest zone ever for treasuries that we've been looking at. And if this occurs, then it does mean that yields are going to go higher. It's going to put pressure on gold as well. So a lot of under the hood workings this week. And you'll have to excuse me for my voice. Unfortunately, I've lost it a little bit today. Let's move over to consumer discretionary versus staples and understand what's been happening in this chart. And it looks like it's basically not really a super defensive day, nor is it strong on the consumer discretionary, being flatlining. We get underneath 2.21, we've got to watch out for the recovery because that's showing us the American consumer is weakening. Of course, core retail sales did not present that, and that's why it's held the same as it has. We've also seen some sneaky liquidity starting to come in. Take a look at this chart here. Central bank liquidity starting to rise back up as markets are starting to fall back down. I wonder why. You know, this thing is almost rigged in some ways when you think about it, but still a huge disconnect between S&P 500 price, Q price, and the overall central bank liquidity. But yeah, they always come back, don't they, whenever things go bad. You can just start to see them trickling it up as they see issues and cracks appearing more likely in regional banks. Let's take a look at US oil. It broke below the trend line, which actually doesn't mark a very good point. We talked about the long leg doji this week, and it was really tough to say that this market was moving towards this upside of 90, 92 a barrel because of this. We were looking for that new high. We still think that it's mostly buy the dip until we get underneath 78.35. So it's basically buy the dip on oil for now. But could this trade be ending? Could we go into demand destruction? And copper would basically be saying, yes, it is. But we don't have a turn point here yet, other than just the trend line break on the smaller timeframes. Dollar index didn't mind the idea of higher yields for longer. Of course, the US dollar has been ramping into this. It still remains at one of our critical levels. But the chart's actually kind of showing that it could be going even further up. I'm not sure. I think it's a good take profit zone personally on dollar index for the longs. And I'll be watching it very closely with all of us together. We'll all be looking at it to see what happens. But we don't have any real analysis there other than we're waiting and seeing what it's going to do next. Gold made a new daily low. So we can see here that's pretty weak for it. No change of trend to the upside and no real strength here. Now, if we have a look at gold stocks, as we mentioned, Barrick's been one of our favored in the gold stocks. It was a bad day. I mean, I'm just going to be real. That was a bad day. And core retail sales did nothing to help us here in this one. So it comes back down to the lows. It could be dead in the water, this trade. Look, there's a lot of trade volume through it. Again, everything is a statistic. So we did need, of course, yields to actually decline for gold to do well. That has not happened at this stage, but that is a brutal sell day. And even with the large transactions coming through gold, it seems like it's not finding that buying pressure. And even with the current moves, it just looks like it kind of doesn't really want to find the buyers just yet. I'm still bullish on gold in terms of stocks, but I do think that this is possibly not a safe low, and maybe not even this is a safe low for now. It's a good accumulation zone. We've seen it before, find out. But if gold doesn't pick up right now, it may be over until around November or December of this year. So we've got to be careful there. Speaking of other things you've got to be careful on, Tesla did not have a good day. It fell down, closed below the low, 232. This, like many stocks, are starting to mark out the possibility of 200 and 210 on the charts. It does look like the bears are in control, with possibly even a 180 on the cards for something like Tesla. What do you think in the comments down below? Maybe we'll put a poll up. Where do you think Tesla will go next? I'm telling you, there's very thin trade volume through here, so it really could start to find some epic sells if the market gets fired up and starts going very bearish. Another market indicator that we'll be looking at is AAPL. Now, it's holding its 20 moving average, which sits right on this yellow line here. But basically, if it breaks through and doesn't instantly rebound back up, which would give us a buy signal, we could be moving back down into the 160s, 164 for AAPL. And that's going to be another $10, $15 shed off the price, and of course, cause further selling across the board. NVIDIA rejected the 618 after getting that upgrade across, and semiconductors, of course, did much worse. But yeah, it's found where it should technically see profit targeting. And we also saw that unusually large trade volume as well, which could mean that, yes, it has hit the peak and it's starting to come back down. This was where we thought buyers would recommence around 400. They certainly did. This is where we think sellers will recommence at this stage. So far, so good. Of course, NVIDIA is going to be tough because the type of year going into earnings, almost everyone always usually buys it. So to fight NVIDIA here is probably the bad one to fight. I would rather fight semiconductors as a whole instead of this stock. This stock tends to run actually pretty well at this time of year, although I think this could be different. Disney entered into our target area, so we're looking for a buy over the next 24 hours if this thing is actually going to turn around. And it does have some of the parameters of what I would call like a 6 out of 10 system. So you're going to lose 4, make 6, and this type of thing. Of course, you've got to make your own risk adjustment and understand how to take these types of things. If you're interested in these types of replications, you can always check out our Daytrading masterclass. But in general, this is a very, very interesting level for Disney. We'll be watching it closely over the next 24 hours. CQQQ continues to get melted. I still like the technical. I still like the zone. Nothing really changes there. We are looking for the stim pack, and we obviously expect that based on what we saw at the start of today's video to potentially come through more of that September-October period. So something we're watching, we're looking at closely, and I do know there's some big investors that have started to buy into China. And I know why the hell would you do that when everything looks so bad? Well, that's the way that sometimes money is made, when you buy fear and you buy the problems. Of course, the technicals at this stage, you would be looking at this and thinking, wow, massive inverse head and shoulders. Absolutely. But I always say you need that huge injection of momentum, which is most likely in this case going to be, of course, China stimulus. Speaking of China, it's hurting the ASX today. Big sell-offs across energy, metals, and financials. What is the ASX 200 for Australian viewers out there before we go to the US? It is mostly those three sectors. So the double top is in play. Obviously, we already talked about this with a short-term weakness here. And I guess, you know, from where it is right now, it seems more likely than not it's going to go down towards something like a 69.50. So, of course, we'll be watching that closely. At this stage, the XJ looks pretty weak. German market also looking weak with a new low. For the German market to turn strong, we'd want it above 16,100. That's certainly not happening at this stage, and it's in line with our Wyckoff distribution. that we've been talking about for a little bit of time. So again, looking weak there. The US 2000's come back down to the most traded level. Interesting level for it. Will it bounce? Yeah, maybe. We'll be looking for evidence though. I'd probably rather a bounce like this and then take that bounce as a trade. But very interesting level. We'll find out what ends up happening. Next stop, if it keeps coming down, around 1825 for the Russell 2000. So yeah, just kind of flogged straight into this level. You can see where it stopped. We know it's a zone, but is it important? Let's look at the major indices to figure out if it is. First up, NASDAQ. Now, NASDAQ's technically sitting on a little buy zone. You could see buyers here. We already know there's large trades that have gone through these two levels, plus another one here. Are they buys? Are they sells? We don't know yet. But for buyers, they're going to be looking at this and saying, I think this could be, a high risk, of course, decent reward style position. There are some arguments to be made that this is like a turn towards the bull end. So certainly NASDAQ with Russell 2000 starting to make, maybe it is time to see a buy. But when we move over to the S&P, it did close underneath the daily 50 moving average. It hasn't hit 4,400 yet, which is a key zone. So that's something we're looking for. And of course, we've said watch this zone. I think that the S&P 500 probably wants to get down there. And if we go to the US 500 futures, it points towards the same thing. US 500 is a new low. We did say that when a new low occurs, 4,400 should be the zone we get to. And then I would like to see it take that level and go below and then actually see a little bit of a rally for now. So 4,400, why would that make sense? Well, let's refresh our maximum pain for this week. And what maximum pain is, just as we see this refresh come through, is it's basically where if all of the options for the biggest expiration of the month expired, worthless, or expired in general, where would Wall Street or the composite man or the biggest hedge fund managers and everyone that gets involved in this kind of market, where would they make the most amount of money? So it turns out at the moment, maximum pain is still below the market. And this is something that we haven't seen for, I would say all of 2023, where we've actually been above maximum pain. We're usually below it by quite a lot. It's been quite a while. So 440, 450, and 430 remain our key positions. And we think that the market should stay within these round boundaries this week. We already thought that at the start, with 440 being a kind of key touch. I think that would be a good touch for the market to get down to. So will it happen? All signs are pointing towards it's certainly quite possible based on the fact that we took that low. There's a little block here. Maybe there's a buyer. If we go small time frame, which I know a lot of you guys do like to look at, is there any kind of turn that we'd be watching? Well, let's say we consolidate like here. So let's say we consolidate here, take a low early, and then breach through that. I would say that's a momentum shift towards the buy side for that particular session. At this point, though, you've got to go with the trend, and the trend is still down, and 4,400 remains kind of that area where I could see the buyers show more commitment. So yeah, markets are down, daily close near the low. That usually shows you that rallies should be met by sellers. And in this case, yeah, that's the current market. The current market is in a downtrend on the things like the daily, etc. Let's move over to Bitcoin. It is still boring. It's still stuck within a range. Still nothing's going on with Bitcoin. And we'll update you if we get out of this coil. But remember, for the longest time it coils, like it's doing right now, when the breakout comes, it will probably be an explosive move. So stick around for that. It will be interesting. Let's move over to the big news coming out this week. We still have New Zealand cash rate. We also have FOMC meeting minutes on Wednesday. Maybe they will help us to understand something about what the Fed's doing. That is now in focus because of the core retail sales being 1%, if you can believe it. That was an amazingly big number. And then we've got unemployment claims on Thursday as well. So there's still a little bit of news coming out for the US this week, but more likely than not, remember, we've underpinned, we've gotten rid of some of the pins that have been stopping the market to be volatile. Expect volatility through the next 2 weeks, especially as we enter into the worst period of pre-election years. If you've enjoyed today's show, remember to subscribe, smash that like button, guys. Thank you so much for watching. You guys are all legends, and we'll see you in the next one. Bye for now.